lot.
Yeah, exactly. Hey, Kimberly, how's it going? Get this on YouTube real quick, and then I'm gonna take it on YouTube and Facebook. We'll be good to go.
What is it?
Get this real quick on Facebook. Oh, that's weird. I can only do it on one. All right, cool. So it looks like we're good on YouTube. If you guys have any questions, feel free to put them in the Q&A, and then I can answer them. Looks like we have a couple questions here from, let's see, Avery said, GBP USD looks like it will be a good move during London sessions. Let me pull up GU real quick. Yeah, I mean, it looks like if it would break above here, that's pretty much what I was waiting for to take this trade. This was a good entry right here. I don't know if anyone took this trade. This was on the 26th, I think Sunday. But this would be a valid entry for a zone, the zone strategy. So right here, I mean, you could have locked in like well over 100 pips on this trade. Aaron, did we call this? I don't know if we called it GU.
I don't think we called you.
Yeah, we didn't call it GU, but the dollar is super weak. So if you look at all of the dollar pairs, I'm not sure if you guys have been following, but if you guys look at all the dollar pairs, like our AU, straight up, EU, straight up, like literally the dollar is so weak. I think they announced on CNBC that it's been the weakest that it's ever been in like the past 2 years. So just looking at all of the, anything paired with the dollar, it's pretty much going to go up, except UJ. So UCAD and UJ, it's going to go the opposite direction, go down, because this means that the Canadian dollar is stronger than the US dollar. Same with the Swiss franc. There was an entry right here. I didn't call this. This might be a late entry for us. And UJ as well. So the difference between UJ and GJ is, we're in a buy for GJ. And a lot of people are wondering why we're in a buy when UJ is going down. That's because the US dollar is weak. The pound isn't weak right now. So that's why we're taking a buy for GJ. Even though, UJ is going down. But you can see here EJ and GJ are going up. Because the thing is that the yen isn't strong right now. It's the dollar that's weak, and that's why UJ is going down instead of going up. But I think it should continue up. I know a lot of people were wondering if if we were going along with the trend. But if I take off the SRs right here, you can see this is the 4-hour. You could go on any time frame. With the 1 hour, it's trending up on literally every time frame, and that's why we took a buy, because it just shows a strong uptrend. So even on the daily, it's a strong uptrend. It rejected off the K2 pivots right here, so we're anticipating it to continue upwards. So I think it's fine. I'm not too worried about it. I can see it retracing right now a little bit, but it's probably just going to retrace to the zone or to the pivot before shooting back up. So also I'm not too worried about that right now. Hey, what's up, Loblaws here? Let's see. We have one question. Someone's asking if we can go over GJ. Oh, that's funny. Yeah, that's exactly what we're talking about too. So yeah, pretty much for GJ, like I mentioned earlier, the reason we took a buy is because it's trending upwards on pretty much every time frame. So you go on the daily, it's trending up. You go on the 4-hour, it's trending up. The reason we know it's trending up is by using the K2 pivot. So the way that the K2 pivots work is if price is above the K2 pivots and the pivots are angling up and spread out like they are right here, you can see that this is a super strong trend upwards. If it crosses below and it's spread out like it is right here, it's trending downwards. So if you look at how it's moving right now, price is above the pivots right here when we made our entry, and the pivots are spread out and they're angling upwards. So that demonstrates a strong trend upwards. Even looking at the trend meter down here, if you're familiar with the trend meter, this pretty much gives you the overall trend on 4 different time frames. So we have it set to the intraday settings, which is the 30-minute, 1 hour, 2 hour, and 4 hour. And you can see down here that it's green. When it's green, this demonstrates that the overall trend is trending upwards. If it's blue, this means that price is consolidating or it's ranging sideways. But just looking down here, you can see when it was green, it pushed up pretty heavy. Again, right here was green, pushed up heavy again. If it's red, it's pushing down, red right here, pushing down, green, up, up, and up. So that's the reason why we took a buy. The reason why we entered this trade was that we were entering a K2 SR zone strategy. So if you're familiar with the zone strategy, pretty much what it is we wait for price to cross one of the zones. Well, first we identify, so I'm not sure if you're familiar with the zone strategy, but I'll just explain it here so that you guys can understand. So pretty much it's real simple. So let's see, number one, this is the K2 SR zone strategy. And requirement number one is identify direction and price. K2 momentum indicator. Next, confirm break in K2 SR zone, K2 SR V2 indicator. And I think that's about it. Yeah, and then 3, you could enter on open of following candle. So let me just go over the requirements real quick. Yeah, if you guys have been with K2 for a while, I mean, you guys are pretty much familiar with the strategy. It's real simple. But basically, I'll show you another entry like right here. So this is going to be an entry in the opposite direction. I'm just going to show you this entry so that you can understand the thought process behind this entry. So right here, we want to identify the direction of price. The way that we do that is we look at the direction of the K2 momentum indicator. If the K2 momentum indicator gives a sell signal like it did right here, you can see that price continues downwards. In order to confirm the direction of price with regard to the momentum, pretty much these red and green vertical bars right here indicate the direction of price. If it's red and it has a red candle, this is going to confirm a momentum swing downwards. If it's green like it is right here, this is going to indicate a momentum swing upwards. So you can see right here, when you got the signal, price came down at about 200 pips. Again, right here, we got this buy signal. Price pushed up about 116 pips before coming back down. Again, right here, we got a sell signal. You can see it moves pretty nice. Like you see a momentum swing every time we get a signal. It's about 100 pips each way. And then if you're familiar with the K2SR, the K2SR is it automatically plots the strongest zones on the chart for you automatically. So pretty much the way that I charted these zones right here is I use the K2SR indicator, which is right here. And you can see that they're automatically plotted right here. You don't see the plots up here because I pulled these zones from the higher time frames. I usually do that if I want to see where the farther zones are so that I know where price rejects from. So just by looking at the chart, you can see that wherever these zones are plotted, generally that's where price rejects from. So you can see price came up here, came down, rejected off this zone, came up, rejected off this zone, came down, kind of got stuck in the zone a little bit right here for these 2 candles. These are the 4-hour candles. So this was an 8-hour move right here. So price came down, rejected off the zone, kind of went sideways for a little bit before shooting back down. As it shot down, it rejected off the zone right here, shot up, rejected off this zone, and then came back down here, rejection, rejection. And you can see, it's real simple just looking at it, identifying where price rejects from. So let me just show you what it looks like over here. So I'll just rewind over here. Just for the people that aren't familiar with the indicators, so pretty much, let's take off the pivots. So as you can see right here, this is the K2SR indicator. The K2SR indicator is going to automatically plot the strongest areas of rejection on the chart for you. And this is good because if you're trading in a certain direction, you're going to want to get out of this trade before it reaches this zone. So as you can see right here, price came down, rejected, came up, rejected, came down, rejected, and it pretty much just bounces from zone to zone. And if you know where the zones are, you'll know exactly where price is going. So if you tie that with the momentum indicator, so this is the momentum indicator, you can see the direction of price. So, you can trade in the direction of price. Right here, we got a buy signal. You can take the buy, and then you can ride this to the next zone, exit before it reaches this area, and then pretty much do the same thing, throughout the chart. And then if you move this forward, you can see that the zones get automatically plotted as price moves. As you can see, there's new zones being plotted up automatically for you, so you don't have to go and plot those zones on your own. And pretty much what I do is instead of having this messy chart where you see all these zones on the chart, what I do is I'll just draw my own rectangles. over these zones, I pretty much just plot them, wherever it's closest to price, because, obviously the zones out here are going to be irrelevant because price is way down here. And then if there's a zone here that's, in the middle of nowhere, I'll just put like a horizontal line, because there's no real zone to plot around there. So pretty much I could do that. And then I just hide the indicator, and there you go. You have the zones on the chart for you. But then once it goes down over here, you can just turn it back on. And then as new zones are plotted, you can draw new zones. So right here, we have another zone. Plot that right there. And this just gives you easy visualization as to the direction of price and where it's likely to reject from. And then again, right here. So if it moves into a new zone, as you can see right here, there were no zones for a while because price shot into an area where it hasn't tested in a long time or even ever. So when that happens, you just have to wait for new zones to be plotted. But now that we have these zones plotted right here, you can see that price respects these zones perfectly. Like right here, price is stuck within the zone. It's trying to break out, so it can either go up, upwards, or it can break downwards. And then again, right there, new zone. And you can see this zone was created way back here. So if you have the zone here, you'll know exactly where price is going to be bouncing from. And if you want to scalp, you'll know that, see, this is about 140 pips within the zone. So if you're scalping, you can pretty much trade from zone to zone. Price gets above this zone, you can sell. Price gets below this zone, you can buy, sell, buy, and you can lock in 140 pips both ways. And it's real simple. It pretty much does all the work for you. But now that you understand how that indicator works, now I can go back to where price currently is, and I can show you how I identified that entry from today. All right, so let me just erase all this. I'll hide the zones because we have the zones already plotted. And then let's go back to the requirements. So let's go back to this example here, so I can show you, another entry that is pretty much the same entry, but just in the opposite direction. So we identified the direction of price, looking at the K2 momentum indicator. And as you can see right here, we have a sell signal. It's a valid sell because it's a sell signal with a red bearish candle. So we've identified the direction of price. In this situation right here, price is heading downwards. Next, you want to identify a break in the K2SR zone. So like I mentioned earlier, there's a zone right here. Once price breaks and closes outside the zone, that'll provide for an entry, because now we know the direction of price, and now we know that price is going to push down until the next zone. So I don't have a zone drawn down here, but this looks like this would be the zone if it was plotted. I only have so many zones up at a time because I want to know where price currently is. So if we rewind over here, we could probably see that there was a zone in this area. See, exactly, there was a zone right there. So I drew this right here just because I knew I had an idea where the zone was going to be, but the zone was actually right there. So if you took this trade right here, you know exactly where price was going to be rejecting from, right there. So, okay, so first we identify the direction of price. Right here we know to take sells because price is going down. Next, you want to confirm a break in the K2SR zone. It broke right here. And then after that, you can enter on the open of the falling candle. So right there, we would have entered a sell. And then I don't like taking stop losses this wide. This is way too wide, about it's 180 pips. So I'd probably put it somewhere around this zoned area right here, maybe about 80 pips. And then I put profit target about 80 pips away as well. So if you took this trade, you would have hit profit target right there. And it worked out perfectly because the zone is right here. So we're already anticipating a rejection off this point because we had that lined up already. So if we had that lined up, obviously price is going to reject from it, exactly like it did right here. And we would have exited this trade right here for, a clear win of 80 pips. And then again, right here, we had a buy signal. You could have taken another buy right here to the next zone and then hit it both ways for 80 pips in both directions. So that's just an example of how the strategy works. And now I'm going to explain why I took this trade right here. So similar to the same strategy that I was talking about right here. Right here, I identified the direction of price because right here we had a buy signal. And then second, you want to confirm a break in the K2SR zone. So right here was the zone. You can see that price obviously broke that zone. Let's rewind to this area. Oops. Yeah. All right, cool. Yeah, so right there, this is how it looked when I determined the entry. So I identified the direction of price, obviously a buy because we have a buy signal right there. I confirmed a break in the K2SR zone, and then I entered on the following candle. And that's pretty much why I entered this trade. On top of that, you can use other K2 indicators for extra confirmation. Like if you want to determine the direction of trend, you can use the K2 pivots indicator. And like I mentioned earlier, you can tell that price is trending in a certain direction. If price is above the pivots are angling upwards and they're spread out. Similar with the opposite direction. If price is below the pivots are angling downwards and they're spread out. So right here, all those are met, it's trending down. Again, right here, price is below, they're spread out, angling down, another downtrend. Right here, they're spread out, angling up, price is above the pivots, trending upwards. So if you look right here, when price broke this zone right here, it was above the pivots. The pivots were somewhat spread out, that they're kind of bunched up. It's kind of hard to see right here, but they're kind of spread out like they were right here at the beginning of the trend. And then they were angling upwards. So same situation right here. This is what I'm anticipating. So you can see this nice move upwards for about 170 pips. Same situation right here. That's exactly what I'm looking for. And that's why I took this trade. So yeah, we're just gonna pretty much wait for that to move. We're in an Asia session, so it's probably not going to move very much until we enter London. But just looking at the other pairs that are in the same spectrum. So this is GJ. If you look at EJ, it's also trending up as well. So that's why I'm anticipating it to continue upwards. So looking at EJ, same situation right here, except we don't have a buy signal. So the next signal right here, what I anticipate happening is price is going to reject off here. We'll get a buy signal. They'll both head upwards. So yeah, that's pretty much it for GJ right there. Let's see, anonymous Cindy is asking, are there any other zone indicators you recommend? No, I only use the K2 indicators. There's nothing else that I really recommend. I mean, everything's here because there's probably other zone indicators you can use, but they're not going to automatically plot like the K2SR indicator, or you can just do it manually. It takes a lot more work for you to draw your own support resistance. The problem with drawing your own support resistance where you're using other people's indicators is that you don't understand what's going on with them. So here's the thing. Let me just delete all this stuff here. So the problem with, let's go to a pair that I haven't drawn on so that I can show you an example. I'm gonna like use CG because I don't trade this pair. And I'll just take this off. So the problem with you drawing your own support resistance or you using someone else's indicator that you can't confirm is accurate or not. So the thing with that is, so that's K2SR indicator. Also, we have the first SR indicator. So if you just want to know what the support resistance is overall, we also have the version 1 of the indicator. And this pretty much automatically plots the support resistance for you. But this is just the support resistance. This doesn't draw the zones for you. But you can see right here that they automatically adjust as price moves. So you can see that the red and green line adjusts as price continues to move. It just automatically plots the support resistance for you. The difference with that and the K2SR is that the K2SR will give you multiple zones. So instead of just giving you the support resistance, this will give you zones where it'll show you where price is rejected from in the past. And the cool thing with this is that you can update it to as far as you want. So I have it go back 100 bars. Those are 100 4-hour candles. You can do 500 bars if you want to go really far in data, or you can see it's loading. Or you can go, if you're scalping, you can go for like 100, like 50 bars. It just really depends on your preference as to how you're trading. But the default ones are going to be 100. 100 and 200 length. I changed my length to 500 because I want it to go across the screen so I can see, as it rejects all the way down here. And you can see it automatically plot the zones for you, so you know where price is going to reject from. So this gives you like a little cheat code as to where not to trade from, because obviously you don't want to trade where price is rejecting from. That's where you want to avoid trading. And you can see how accurate it is. It pretty much updates as it moves. But yeah, back to what I was saying earlier. So pretty much, if you were to draw your own support resistance lines, it's a little difficult because the thing with support resistance is that it's subjective. The cool thing with the indicator is that this pulls data. It's not subjective. It pulls actual areas where price has rejected from. People draw support resistance differently. Like sometimes they'll be like, oh, this is the high and this is the low, and then that'll be support resistance. And then they'll probably look for smaller support resistance. They'll think that this has touched twice, so they'll put a support right there. And then they'll think that, this touched twice right here, so this is a resistance. So it's kind of hard because the thing is, like, I see this as, touching multiple times, but other people will see it differently. Like, this might not be a resistance for someone, this might not be a support for someone. But the thing with the SR is that it's not wrong. It can never be wrong because the data doesn't lie. So you can see right here, I was kind of close. Right here, I have this lined up right here. And you can see that there was a line right there as well. So similar with right here, I drew this resistance. There was a line drawn right there too. But the only problem is that it doesn't draw zones. So, you kind of have to eyeball where the zones are, but it doesn't give you like the two areas. It just gives you one area. So right here, I drew a resistance, but it doesn't look like there was a resistance up there. But if you're using the indicator, it pretty much draws, all the zones here so that you don't have to draw these yourself. So if you're doing this by hand, like you took this off, there's no way you'd be able to identify that all of these zones over here existed. But if you turn on the SR like that, you can do this. You can just draw a zone like that. You can draw a zone like that over it. Something like that. Something like this. Something like this. And then you can take off the SRs. And there you go, you got zones. You can see, how perfect it was. It drew all these areas where price rejected from. Like price came down, came up, consolidated right here, came up, rejected, came down, consolidated, came down, came up. And then you can see how easy it is to identify where price reject from. Let's see. So yeah, there goes an answer to your question. See, VD's asking, you mind going over GN? So yeah, I'll go over GN right now. We have the next 4-hour candle closing in about an hour, but I already talked to Aaron. We're not going to call a trade because we have AUD news at 6:30. So the thing is, we don't want to call a trade right now, or I mean at 6 o'clock, because if we enter a trade at 6 and then there's news at 6:30, that could really screw up the trade. And if you guys are familiar with AUD news, this usually affects the market pretty heavily. So look, the last thing we want is to enter a trade and then price goes the complete opposite way. So that's probably why we're going to hold off on this. Our next signals are probably going to come around 10, because that's when the next 4-hour candle closes. But we'll still monitor the chart. If we see something, then we'll take it after the news happens, because we're just going to see how the market reacts to the news. But generally for AUD news, this usually like screws up the market pretty bad. So that's why we're just going to hold off on that for now. And then we'll take a look a little later. Let's see, Melissa said, what time zone is the news because it's 8 here? Melissa, so what time zone are you? This is Pacific Daylight Savings Time. But if you go on Forex Factory, you can click on this clock right here, and then you can change it to whatever time zone you live in. But 6:30 is about an hour and a half away, so it's 5:09 my time, Pacific Daylight Savings Time. And the news is going to happen about an hour and 20 minutes. So if you don't want to check the time zone, you can see, I mean, you can just eyeball it. Like pretty much just don't take any trades from now or within 2 hours, because the last thing you want is to be caught in a trade that is going to go the opposite direction. If you guys are still in US 30, I'm gonna take off my alerts for that one because I'm not following that anymore. We hit TP for that already. I'm waiting for it to hit TP too. So if you guys are in the US 30 call that I made earlier this morning, the daily US 30 trade, we hit TP1 over here for 300 and I think 75 pips. And then we're waiting for it to hit TP2 down here for 750 pips. Right here, we have a sell signal. Like I mentioned earlier, if this closes with a red bearish candle, you know, odds are price is probably going to shoot downwards. It shot downwards right here. This was a K2 pivots entry up here. So some people entered this trade. They had better entries because they entered way down here. We entered way over here, following one of our strategies, but some people entered up here and they made like a ton of profit up here because if you enter this right here, you would have locked in about, you know, well over 1,000 pips. If you take it right here, you would have gotten even better positioning. So if you enter this position right here, you'd lock in well over 1,300 pips. Again, right here, if we get another sell signal, I'm anticipating it to drop pretty far. So one reason for that is it's a pivots entry plus prices below the, let me just take off, it's too messy. So price is also below the K2 pivot. So you can see right here, it's in a very strong downtrend. So if we get a valid sell signal, I'm anticipating it to drop pretty heavy. We'll just have to wait for that because we just don't have the confirmation just yet. But let's see. See, so yeah, I'm gonna go over a GN right now. So VD asked me to look over GN right now. So let me pull up GN. I actually have it marked. I think I was gonna call this trade earlier, but I didn't. Yeah, so it looks like there was an entry here for a buy at 6 o'clock. So at 6 a.m. today, there was you know, the same strategy we were applying for the SR. Similar to right here, there was an entry right here, but I didn't call it because it was too close to the resistance from the SR. So right here, there's a resistance. Right here, there's a resistance. Again, right here, there's another resistance. And this is the reason why I didn't call this, because I was anticipating price to reject at some point. So as price got closer and closer to this resistance point, you know, odds are price is going to reject. So you can see right here, price made a pretty big push. Like it pushed up from down here, broke this resistance, and then it broke this resistance. Obviously, if it breaks to resistance like that, it's going to lose its strength. It's about time for it to probably at least retrace back a little bit or reverse in some cases. So it's, you know, same situation right here, like price right here. I'll just take this off. So price right here broke below this this zone right here. So it broke below the zone, it reached this zone right here, and then it rejected. Again, right here, price broke this zone, and then it rejected off here. Same situation right here. So price came from way down here actually. So price started way down here for, you know, a triple bottom if you had the SR indicator. And then price rejected from down here, broke this zone right here, consolidated a little bit, broke this zone, and then it broke this zone. So if you count the zones that it's broken 1, 2, 3, 4 zones. So if it breaks that many zones, it's probably about time for it to reject or maybe even reverse. So that's why I didn't call this trade right here, even though it was a valid entry. But let's look at the pivots. So you can see right here that price is trending up very strong. Price broke the pivots right here, and then it just pretty much shot up, retraced a little bit, rejected, shot up. That's probably what's going to happen right here. Let me just delete this. So price came up. It looks like it's going to come down. It's probably going to test the K2 pivots like it did right here. And then it's probably going to shoot on upwards again for a K2 pivots entry. So if you guys aren't familiar with the K2 pivots strategy, this is one of the newer strategies that I released, I think about a month ago. The way that it works is pretty much you want to identify, I'll just write it right here, K2 pivot strategy. So for one, you're going to identify trend, K2 pivots. Next, you want to identify retracement rejection off K2 pivot zones. And then lastly, identify valid K2 signal, and then enter on open of following candle, which is real simple. You know, all of our strategies are based off the K2 momentum indicator. So the momentum indicator is always going to be our catalyst when to enter a trade. So first you want to identify a trend. In order to do that, you want to make sure that the pivots are angling in a direction and they're spread out. So right here, obviously there's a downtrend, right? Next, you want to identify a retracement and rejection off the K2 pivot zone. So right here, price is trending down. You can see right here, as soon as it got to this low, it retraced right here, and then it rejected off the zoned area. When I mean rejection off the K2 pivot zones, it just needs to reject within these zones right here. Anywhere in the middle right here, nice rejection. You can see right here, price retraced right here. We had a nice candle right here, a wick, and then it rejected, came back down. So lastly, you want to identify a valid K2 signal. Right here, we got a sell signal. It's a red sell signal with a red bearish candle. So all three requirements are met. You can enter on the open of the following candle. So right here, you can enter a short position, enter right there. You would have locked in 300 pips. Easy, straight to CP. Same situation again right here, another entry. Identify the trend. It's still trending down, right? Identify retracement and rejection of the K2 pivots. Right here, price came to a low right here. Retraced up this direction. Nice rejection off the last level of the K2 pivot right here. You can see the nice wick, right? After that, identify valid K2 signal. Again, right here, a valid sell signal. Enter another sell. Another 200, 300 pips right there. Same situation again right here. I mean, you guys could just apply the strategy back to back to back. So everyone's asking me what's the best strategy to apply right now. It's the K2 pivots because just the way that the market's been moving. Again, right here, identify trend. Trend down, retracement. Right here, price established a low. Retraced right here, rejected off the K2 pivot zones. Valid K2 entry right here. I mean, a K2 signal, enter a sell. Again, right there for another 269 pips. I mean, it's easy, guys. It's not very difficult. Akiva is asking, what are the pivots you're referencing to? The pivots are right here. They're these 4 lines. This is the K2 pivots indicator. So if you take that off, there's no pivots on the chart. Turn it on, pivots are on the chart. The reason they're pivots is because price will reject off these pivots. Like, you know, pivot is where price goes opposite from. So price goes up, rejects off here, pivots back down. So that's why they're called K2 pivots. Because, and they're also by level. So level 1 is the green. That's one of the weakest pivots. Level 2 is the second level. And then as you go higher, it goes from low to high. So once you go higher, that's the strongest pivot level. You know, if it rejects off the higher pivot levels, the harder the drop. So you can see right here, price was, you know, it's small rejections, and it comes up here, rejects off the highest pivot levels. It drops like how many pips? 500, 600 pips. Same situation right here. Price comes down, it retraces up here. It rejected off the farthest pivot right here. And then look at the drop after it rejected from 500, 600 pips. But yeah, that's pretty much what the indicator does. You can see right here, you know, price just pretty much pivots off the K2 pivot zones. So like pretty much whenever price gets near the zones, they reject off them. And that's pretty much why they're called pivots. The thing that we call them pivot zones because they're areas where they reject from. They're not like pivot lines because pivot lines are just stuck in one area. So generally, if someone wants to call it a pivot, like a normal pivot, it would just be right here. So this is the pivot, right? The thing with the K2 pivots, with the lines that we're using, is that they move with price. So as price moves, I can just show you right here. So let's just rewind it. So you can see right here, as price moves, the pivots move with it. They react with price. So as price hits it and rejects, the pivot either gets stronger or it gets weaker. If price keeps testing it, then the pivots get pushed upwards because price is trying to reverse. They're not like normal pivots where they don't move. You can see here, they move with them. You can see here the pivots are moving upwards because price is trying to reverse the trend, but you can see a nice rejection up here, which causes price to shoot down heavily. I mean, right here. So price rejected right here. It came down. It came up here for like a double top. As you can see right here, I mean, it doesn't look like a double top, but if you just line these up right here with the pivots, you can see it tested the pivots twice. It's like a double top. And then there's a strong rejection right there, and then you can see it tumble pretty heavily. But yeah, looking at the current price right now, same situation right here. So you can see right here, price is trending down pretty strong. I'm gonna turn on the, actually it's already on the momentum indicator. But yeah, right here we have a buy signal. So currently what I anticipate is price to come down. Like we'll get a sell signal, like, so right here we're looking for a buy. But over here, you can see that we had some, it was trending down, and then we had a buy signal right here, right? So price rejected off this low. It retraced from down here, and then we got a buy signal here. That's pretty much what we're waiting for right here. Where what prices is up here, but as it pushes down, it's going to get a sell signal. But that sell signal isn't necessarily meaning that price is going to head down too far. That's pretty much just signifying a retracement. So what I'm anticipating is price to retrace down here, test this pivot or one of these pivots, and then shoot back upwards for a valid K2 pivot entry. So that's pretty much what I would be waiting for right here. So we identified the trend. Obviously, price is trending upwards. Identify a retracement. It looks like this is a retracement right here, right? So this is a top. So price came up, established a top right here. Now it's retracing down. Now we just want to wait for a rejection, number 2, rejection off the K2 pivots right here. So once it rejects, we're going to wait for a valid buy signal, like right here. I'll show you an example for a buy. So these were sells over here, obviously, but right here are buys. So pretty much price was trending upwards, retracement, rejection off the zone, buy signal right here. You could have entered a buy position right there, and then you could have locked in 300 pips. Same situation right here. We've already fulfilled the first requirement because price is trending upwards. Next, we're identifying the retracement and rejection. So we're waiting for, it's already retracing right here. We're waiting for price to reject off the pivots down here. Once it rejects, once we get a valid signal for a buy in the direction of the trend, then we can enter a buy position whenever that appears, and then ride that up for like 100, 200 pips. But yeah, VD, that's pretty much what I'm looking at right now. But I don't really see anything at the moment. So I'd probably give it some time because we are in Asia session, so it's not going to move very, very fast. It's going to take some time. But once it does, I'll probably call that trade. All right, let's see. Going to the next question. All right, so Trippy's asking, he said, I'm a buy on gold. So Trippy, we've been looking at gold this whole week. The problem with, well, gold is a good buy because the US dollar is weak. When the US dollar is weak, then obviously gold is going to be strong. Actually, this looks like a really good buy right here because this is the same strat. Let me go back to the, where was I at? GJ, oh no, it was at GN. So I'm just going to copy this. This is actually a setup for a nice bullish move. So, just following, let me just delete all this stuff because price is way too far. Like these zones are irrelevant at this point. So if you're applying the K2 pivot strategy right here for gold, it's been hitting like crazy just by looking at it. So you can see right here, if you identify the trend right here, price was trending upwards because the pivots were angling upwards, plus they're spread out. So it's a strong uptrend. Identify retracement. So right here, price shot up, or it was trending from way down here actually. So let me pull this down. So price was already trending over here because you can see price was angling upwards. I mean, the pivots were angling upwards and they're spread out. So if you identify the trend that's trending upwards, you identify a retracement. So price was going up right here, retraced down right here. It rejected off the pivots right here. Oh, well, not the pivots, but the zone. And then we had a buy signal right here. So this would have been a buy. You could have entered a buy right there for, was this like 300 pips, I think. I don't really trade gold anymore, so this is why I didn't take these trades, but these would have been some good entries. Again, right here, another buy entries in the pivot strategy. Again, right here, another buy because it's trending upwards, retracement, rejection off the pivots, buy signal, enter on the next candle. Right there, another 300 pips. Same situation. So this wouldn't be a valid buy because it's an invalid buy signal. It's a bearish candle with a buy signal, so we wouldn't have taken that. But just looking right here, same situation, trending up, retracement, rejection right here, buy signal, enter on the next candle, another 3,000 pips or 300 pips. Again, right here, same situation, trending up, retracement, rejection, buy signal, enter on the next candle. Right there, 6,000 pips. That's crazy. But yeah, again, right here, same exact situation. So identify the uptrend. Obviously, it's an uptrend right here. The pivots are angling up. They're spread out. Clear uptrend. Identify the retracement and rejection. Price established a top right here. It retraced, rejected off the pivots right here. Requirement number 2 met. And then identify a valid K2 signal. Right here, there is a valid buy signal. So all the requirements are met. We just have to wait for this to close. This is going to close in about 30 minutes. That's when the next 4-hour candle closes. The only problem is that we have news coming at 6:30. So 30 minutes from there, you know, something crazy could happen because it's odd news. So it can shoot up or it can shoot down. So it's way too risky. I don't think I would take this trade, even though it looks as good as it does. But if you want to take the risk, then yeah, it would be a good buy. So if this closes, same situation right here. Once it closes, you enter on the open of the falling candle, and then it can skyrocket. But based on the news, I mean, I wouldn't necessarily just jump into it because you might get. So the problem with this right here is that this is too easy, right? It looks way too easy. People are, since it looks like it's going to obviously go up, there's so many people that are buying. The thing is with the institution and the market makers, they're not going to make it that easy on you. So a lot of people here got suckered in. You can see these crazy spikes right here, right? So if you go back to here, where's Aaron at? Aaron, you here? So you don't want to get suckered in like Aaron over here on gold. So pretty much right here, a lot of people got suckered into this trade because it looks like a clear buy, right? But the thing is, you have to be smart about it. You have to think on both sides. You have to think like you are the institution or you are the market maker. You're not going to just keep shooting it up and let people win. Look what happened here. So people entered a buy right here, and they probably put their stop loss right here at this low, right? And look what happens. Everyone got stopped out. And then what happens after that? It corrects back up. So the thing is, you guys have to be smart about it. Just because it's angling up and it's going up like crazy doesn't mean you should hop into this trade, because the market makers and institutions will stop everyone out right here. It dropped how many pips? Let's see. It shot up right here. It dropped like 700 pips, guys. You know how many people had their stop losses in this area? Like how many people lost money on this trade because they thought it was going to automatically go up? The thing with gold too is that it's not a cheap pair to trade. So if you don't have enough margin to cover this trade, you're going to get margin called out. And that's what happens to a lot of people here. And that's why I wouldn't even trade gold right now, because the thing is, when price is moving like this gives the institutions and market makers the opportunity to manipulate price, because there's so many people buying. They're not gonna let price keep. Well, this is what they're gonna do. They're gonna let price go up a little bit to give people some, get people hyped up, and then people are gonna FOMO in. And then as soon as people FOMO in, like watch, when people buy into this trade, they're just gonna spike price down like 500 to 1,000 pips to stop everyone out. So everyone here loses, and then the banks take all their money, and then they shoot it back up. So that's why I wouldn't trade gold. Like, I know it looks like a good trade to take, but it's a very risky trade to take, because like the market isn't going to be that easy. You guys know trading isn't guaranteed, and it's not super easy. Like, it looks like it's a great buy, but this right here might happen. And this is what I anticipate happening. especially because there's news at 6:30. That's going to be their excuse. So when people enter buys right here, they're going to spike price, or they might spike price, and then they're going to say, oh, it's because of the news. But the thing is, news doesn't always affect market directly. That just gives institutions and market makers a reason to blame some crazy movement. Or if you're using like an unregulated broker, they're going to trap you in this trade. They're not going to let you exit the trade, and then you're going to lose all your money. Your account's going to get blown, and they're going to say, oh well, you shouldn't have been trading when during high volatility, during news. Slippage. Slippage is like your biggest enemy if you want to trade during news, or if you want to trade when the market's crazy, because the brokers can just blame slippage on anything, and that's why I just don't trade during news, because I don't want to get caught in those situations. But yeah, Andrew said thoughts on gold, another sell. So it might be, Andrew. I know yesterday we were talking about it, where I had I told you guys I was putting like a sell stop somewhere around here, and it actually dropped like I said it was going to. Because it's the same situation as yesterday. I kind of identified this as happening because it was way overextended, and I knew that it had to retrace or pull back at some point. It's kind of like playing the game of chicken. Who's gonna get stopped out like first, or who's gonna get kicked out first. So that's why I just wouldn't I wouldn't risk it. But yeah, Steve, Andrew, you're probably on a better. You probably have better grounds to take a sell if you did the same thing I talked about yesterday. If you put like a sell stop right here at the pivots, you can probably scalp it down and make some profit right there. So you can probably scalp it down about, see, like 100 pips and then get out. That's the key. If you want to trade something like this, I wouldn't hold it long term. I would just scalp it, because you don't want to get caught in manipulation like this right here. Like, this is crazy, guys. I don't know if this looks normal to you, but it doesn't look normal to me. 700 pips. That's a big move within what, 48 hours. So yeah, if you guys are trading gold, just be careful. It's not something I would trade right now, but if you guys want to risk it, then by all means, more than welcome. Let's see. Yeah, Melissa said, especially with it being so high. Yeah, exactly. That's what I was saying yesterday too. Like, when it pushes up this high, it's gonna lose. It's gonna have to pull back at some point. So that's why I wouldn't take this trade. I like trading when price is moving normally, like right here. Like, price is moving normal right here. You can take easy buys right here. Like right here, easy buy, no manipulation right there. Right here again, another easy buy, no manipulation. Again, right here, easy buy. And then you get up here and you're like, crap, this is, because this is a crazy move. If you count this from this low right here, from the 16th till now, that's like I don't know, what is that, like 2,000 pip move nearly. And it's bound to retrace at some point. So I would just be careful if you guys are trading that. So let me keep going. CB said, mine looking at USD MXN, the peso. I don't have it on my chart, so I can just type it in. That's actually a good pair to trade. I think Spencer was trading it before. We went over it. That was like a good find that he noticed. It was easy to get a lot of, to make some entries off that. So it's clearly in a super strong downtrend. Personally, I don't trade exotics because they're just I don't find myself making too much profit off it, because it's harder to get out. The spreads are super wide. And I think the fees are kind of high too, depending on which broker you trade with. But just looking at it here, it's clearly in a downtrend, like a super strong downtrend. Like I mentioned before, the US dollar is super weak. So if price is going down, this means that the second currency is stronger than the first currency. If price is going up, that means that the first currency is stronger than the second currency. So the US dollar was strong here, pulled back, strong again, a ton of consolidation right here. And then starting on the 15th of May, the US dollar just started losing a ton of strength. So that's why it came down right here, tried to correct a little bit, and then it dropped down heavy again right here. So let me just, I'm gonna draw the zones real quick so we can see, you know, where price might, oh, it's actually at support right now. So I wouldn't take a sell because it's rejecting off the support. And this is why these indicators are so useful, because if you have the K2SR indicator, see, there's no way that we could identify that it was at a support. But if you turn on the K2SRs, you have them lined up for you right there. You don't even have to, you know, you don't have to think twice because the computer has already identified areas of strong rejection. It identified the double bottom right here, or the triple bottom, I guess. And then the next zone is this zone up here. And this is pretty much how I set up my trades. Like first, I look if there's an entry. Next, I use the K2SRs to identify areas of rejection, because obviously you don't want to trade where price is going to reject from, because you know that as well is going to be areas for manipulation. So I'll explain to you how this would be an area of manipulation right here. Like you guys just kind of have to, you guys have to analyze the trades from both directions. And then you also have to think about what are the market makers and institutions looking for as well. Because the thing is, the reason why majority of people fail at trading is because they don't analyze it properly. I mean, there's no wrong way to analyze it, but they don't fully analyze the trades as they should. So let me just take the SRs off. And see when I take off the SRs, the chart is lined up so nicely. You can see exactly where price rejects from. So you can see price goes from zone to zone. Price went to this zone, went down to this zone, this zone, this zone, came up here, rejected off this zone. It pretty much just goes from zone to zone and makes, you know, it makes trading a whole lot easier if you guys can identify these zones. So although it's in a strong downtrend right here, it's probably going to, okay, so let me go back to what I was saying earlier. So the thing is, if you're trading like everyone else, you know, everyone else is identifying this as a double bottom, right? This is what I don't like to trade. A lot of people like to trade these patterns, but I try to avoid them, because the thing is, the market makers and institutions know that you're looking at the same thing. So once price gets to this certain area, they know that you guys are watching the chart. And you know what's the obvious thing? The obvious thing is price is going to reject off it and shoot up, right? The problem with that is that the market makers and institutions aren't going to make that as easy. You know that the majority of people that trade patterns like this fail, and they lose the trade, and it's not their fault. The thing is, you know, that's common sense. Like obviously price is supposed to reject off that point. But what the market makers and institutions do is once price gets to this specific area, what they do is they look at sentiment. So if you guys aren't familiar with sentiment, let me look it up for you guys real quick. Let's see, IG sentiment. What is this? USD MXN. All right, so if you guys want to look up sentiment, you just Google IG sentiment and then the pair that you're looking at. So this is like something that you should use in your analysis if you are trading patterns, or if you're trading something that's commonly traded. Like this is a common pattern, you know, double bottom, everyone looks for double bottom. Double top, everyone looks for double top. And you can see right here that this is exactly where the manipulation happens. You can see right here, there's a double top, right? And obviously people sold right here. And then they reversed price upwards. So you can see right here, people took a sell right here, and then they gave people like a little gimme. They were like, all right, cool, they're gonna push price a little bit. And then they shot price way up here to stop everyone out, because everyone's stop losses were around this area. So what do? They stop everyone out. And then what happens here, they stop everyone out again that try to take the opposite direction. So that's how the markets trick you. They make you think that price is going the opposite direction. They push it up. So they trick you this way first, because you would have gone tricked into this double top right here. You would have lost some money right here. And then as price broke above here, you would have gone tricked again, because you're like, oh, crap, it's not a double top. It's going to be, you know, shooting the opposite direction. As you enter a buy right here, they give you another gimme. They push price up a little bit. So you're like feeling good. You're like, okay, cool. I'm in the proper direction. And then they shoot price straight down. The same situation that would happen right here. So if you're looking at this double bottom right here, you need to look at the sentiment. So if you look at the sentiment right here, you're going to see where the majority of traders are. So you can see right here, 66% of the traders are short, right? You know what that means? That means that people that are looking at this chart right here are betting that price is going to, that this is not going to be a double bottom, but that it's going to break below this double bottom and shoot downwards. And that might happen. So like if you look at what happened right here, people are thinking the opposite. So right here, they might push price down a little bit just to sucker people in. And as price comes down right here, everyone has their stop loss. So this is what it's going to look like. People are waiting for price to break below the zone and then enter a sell. This is what their setup is going to look like, right? They're going to go for like a 3-to-1 right here. And then they're going to let price go down a little bit, like right here. And then they're going to shoot price upwards, like right here, stop everyone out. And then after everyone gets stopped out right here, what are they going to do? Shoot price straight down, just like what happened right here. So this is something that you guys have to look at, just so you guys have a full spectrum of analysis with regard to, every trade when you enter it. And one thing that you want to remember is you don't want to trade in the direction of everyone else. Like right here, let me just put this over here. Because the thing is, if 66% of people are short, the market makers are going to want to take the 66% of people's money first. So they're going to stop all these people out right here. They're going to make all the money stopping all these people out, and then they're going to bring it back down so that they can make money both ways. Because if it shoots back up, it's going to be the same situation right here. People are going to sell right here. They're going to get stopped out as price shoots up this way. There's going to be more buyers, and then they're going to stop people out this way, and they're going to shoot price in the proper direction. And that's just one way to look at it. I never recommend trading in the direction of everyone else. I generally like to trade in I wouldn't say the opposite direction, but I trade in the direction of momentum. So if you have the K2 indicators, this will help you identify the direction of price. So yeah, so for the peso, this is just a really risky trade video. I don't know, are you in this trade already, or if you're just looking at it? Generally, I would wait for it to break below if you want to enter a sell, because obviously it's in a downtrend, so you want to take a sell. But the thing is, I would wait for price to break and close below, and then I would probably even give it a little more time. Like I would wait for it to break and close below and push even farther below down here, like to like this area down here, because you don't want to get caught in this right here. So right here, same situation, people enter a sell. They waited for price to, so this is where people would have gotten screwed heavily, because right here, they probably would have waited for price to close below this zone. And like I mentioned, the stop loss is probably somewhere around here above this area. They let price go down a little bit, and then they reverse it up, stop everyone out, and then come back down. Same situation right here. Price might, so if you enter a sell right here, he might let it come down a little bit and then shoot it upwards. But I would wait for it to close like somewhere lower to give you extra confirmation. So look right here. If you waited for this to close a little lower, so instead of entering right there, you just waited for it to close like somewhere down here, you could have caught this move and you wouldn't have, it would have went straight to TP. Yeah, there was like no drawdown. So that's one thing that I'd probably recommend. I'd probably just wait on it. Wait for it to give some extra confirmation before you enter that trade. So let's see, we got, all right, so there goes that question. All right, B. Shaw wants us to look at NASDAQ. So let me pull up NASDAQ real quick. I think a lot of you guys are still in NASDAQ from this morning, right? Let's see, where's my NASDAQ? Right there. So NASDAQ's looking like a sell. Let me look at our US 30 right now. Yeah, it looks like it's looks like it might be trying to reverse downwards. Let me see if there's man, there's a ton of zones right here. This is why I don't like trading when there's too many zones. within the area, because it's hard for you to identify areas of, you know, rejection. There's obviously some rejection right here and up here. But the problem with this right here is this whole area is a rejection area. Like prices rejected in the same exact price point multiple times. So I draw this area right here as a rejection point. And then again right here. So this is a bit of a problem because, I mean, it looks like it's coming down because, you know, it's like a double top right here, and then it came down and then it pulled up, and then it looks like it's trying to continue down, but I would wait for it to close below these zones, or maybe even below this zone right here. It just really depends on how you want to trade it, and how long you want to hold it for. Because if you're holding it long term, then I think you should be fine. But actually, I don't know, because the thing with NASDAQ is that stocks are heavily moved by news. It's not really, I wouldn't base it off technicals, especially with coronavirus going on. Like this could literally be in a, like right here, it was in a strong uptrend, and then it dropped how many points right here? It dropped like nearly 766 points, nearly 800 points randomly, even though it was trending up pretty nice. Same situation right here. Like price looks like it's coming down further, which it might come down right here, but it might reject off these zones right here. So it might even reject right here, or it might have already rejected. So you can see right here, price has tested this zone 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 times. So this is a strong support right here. But you know, if you go back and you look at what I was mentioning earlier with sentiment, see if I can find this right here. All right, what was that? IG sentiment, NASDAQ 100. So let's see if I could find. So if I'm looking at the sentiment for IG, see, this is tough because it's 51% short. So market could go either way. When it's 50% short, it's going to be hard for the institutional market makers to determine, you know, the direction they want to push price, because there's not, I mean, there's slightly majority of people short, but only by 1%. So they're not really going to make that much money. I mean, they're going to make money, obviously, but is it worth the manipulation? Probably not. So they're probably going to let it continue in the direction that it's supposed to. So right here, price might come up, and then it might reject off the pivots and head down to confirm a reversal and a trend downwards. So pretty much for this, I would just wait for I would wait for price to, well, I would wait for a sell signal, but a valid sell signal. So right here, if this closes with a green candle, this obviously won't be a valid sell because the direction of price isn't matching the sell signal. Like you want to confirm the proper signals because they're going to confirm the momentum. So right here, we have a valid buy signal. It's in the direction of trend, and it shot up like crazy. Like right here, if you took this, it's like, well, like 400 pips. Again, right here, this is well, it wasn't in the direction trend, but it was a valid momentum signal. So right here, if you took the sell, this would have been like 500 pips right there. Same situation right here. The only issue was that price wasn't trending in that direction. That's why I try to trade in the direction trend, because if you take the valid buys right here, like, and they're trending upwards, they usually push in that direction pretty far. So right here, buy signal, direction trend, nice push upwards. Right here was a sell in the opposite direction, not in the direction trend. It didn't really go that far. Right here was different. This actually came down and it pushed power downwards. So I would wait for a valid sell signal before entering a sell. Otherwise, it might push up slightly before rejecting off one of the pivots. But yeah, I would just recommend that you use the pivot strategy on here. You know, similar to what could have been used down here. But right now, I don't think NASDAQ is a good trade to enter. Let me see if Wade said anything. I don't think Wade gave an entry for this yet. Let's see the K2 alerts. So Wade has the Aussie. He has the S&P. I don't know what this SPI 200 is. I've never seen that one. I think he might have had a sell here somewhere. NASDAQ. Yeah, I don't think he called a NASDAQ yet. S&P. Yeah, I don't see any calls from Wade. I would probably just wait for he said get ready to add a 2% sell on NASDAQ. Let's see. Yeah, I can't tell what he actually, let's see. Personally, I'm gonna hold my buys from earlier both. So he's looking for a buy. But this was a long time. It was on the 14th. This is way too long. Let me go back down here. Huh. Yeah, I don't see anything where he says anything about NASDAQ. He just says hold NASDAQ, but I don't see. Oh, he said NASDAQ to 10,000. That was on the 20th. Yeah, actually, I don't see anything from Wade from today with regard to NASDAQ, but it's just in too risky of a position right now. So I personally would just hold off on it until you get extra confirmation. So if you get a valid sell signal, I'm not sure if you have the indicators B, but if you do have the indicators, I would wait for a valid sell, and then once we get the sell, we could probably take it down. But it's in a super strong uptrend right now. So I mean, me personally, I probably wouldn't take a sell just because of the trend. But NASDAQ also, we're in Asia session. The stock market isn't open right now. So the volatility that is that's moving, I would just, yeah, because NASDAQ, I don't think it's going to go down that far. Unless there's anything in the news. I don't know if there's anything that happened causing NASDAQ to fall, but let me see, CNBC. So I'm looking on CNBC right now. Looks like NASDAQ is up right now, 33 points. It's up 0.31%. See, if you trade NASDAQ, you have to follow the news. Indices aren't like Forex where they move smoothly in patterns. When you're trading stocks or indexes, you really have to see what companies are in those indexes and if there's anything crazy happening causing them to drop. So right here it says Jeff Bezos will testify about Amazon. I think Amazon's in the NASDAQ, so that's probably why shit's dropping. Like there's a lot of factors that go into trading, stocks. It's not all technicals. You kind of have to look at the news to see if there's anything going on. See, Zuckerberg will defend Instagram, and this stuff too. Like all of these companies are within the NASDAQ, Amazon, Facebook, and they're not good news. So that's why, that's probably why it's coming down right now. So it's been coming down since the 21st. You kind of have to analyze the news to see what's causing the movement. But it looks like it can really go either way. Let's see if there's anything else here. Yeah, I'm not sure. Things you pops. The thing with the NASDAQ is that it's a lot of tech stocks. So you have to look at the tech companies like Ring, Zoom, Amazon, Facebook, Instagram, like those companies. So let me just click on the NASDAQ futures. Yeah, there really isn't too much to look at. You know, obviously it's going to go up because we're in COVID right now. All the tech companies are here to stay. They're not going to go. They're not going anywhere. But personally, if you were to enter that trade, I would probably just wait for it to. So since we're getting an invalid sell signal right here, which is going to close in about 5 minutes, if we get that invalid sell signal, the next signal is going to be a buy signal. So I would wait for a price to close above this area right here, and then you can write a buy from there for, you know, about 100, 200 pips. But I probably wouldn't sell it. But if you were to enter a buy, it'd be a buy stop. I wouldn't enter market. I wouldn't enter a buy limit. I would just wait for a momentum to swing in that direction, and then I would catch it. Melissa said, I think he said wait. He called it yesterday, if I'm not mistaken. Yeah. So wait trades off fundamentals a lot, and you know he's following stuff too that's affecting the market. So he said to wait off Nasdaq. So if he said wait, I would just wait. He's a specialist in indexes. I only trade US 30. So if you have questions about US 30, I can answer that. But I don't really follow Nasdaq or S&P or, you know, any of the smaller indexes like the Aussie. Let's see. Let's see what else we got here. All right, Andrew is asking about US oil. Let's see, Andrew said, what exactly does it mean when price tests a zone? What actually happening in the market? So when price is testing a zone, like right here, so this is a zone up here, right? This is a zone is an area where price has tested and rejected from in the past. So you can see right here, this zone wasn't created the first time it tested right here. It just came down, and then as price came down again right here to this same exact place where it rejected from, that's when it's created into a zone. A zone is just an area where price has gone twice and hasn't been able to pass. So the zone is pretty much a support or to resistance. You can see right here, this is a lower zone right here because price came down, tested the zone. This wasn't a zone yet until it tested right here. Once it tested twice, it became a zone because that's going to be an area where you can look at price to likely either reject off it or break it and continue downwards. And this is just, it's not an exact place where price is going to, you know, do that because you can see right here. So right here, this was a zone, but price shot right through it. It became a zone once it tested it right here and rejected. But that's pretty much what a zone means. A zone is just an area where price has reached at a point in the past and rejected off it, because it gives you a good understanding as to where it might reject again. Because you can see right here, so let me go to a different pair. I'm trying to find a smoother pair so we could, yeah, so like it's different for indexes because indexes move a little different. They don't move as smooth as Forex pairs, but pretty much right here, you can see these zones. Price usually rejects off them. It either rejects or it breaks through them. Those are areas to look for because the thing is, if you trade from zone to zone, like once you reaches this zone right here, you can take a sell, like this sell right here, and then you just pretty much take that sell until it reaches the other zone. So once it reaches this area, you can exit the trade, and then you can wait for price to either break it or reject off it. So you'll be in the safe zone. So you just wait for it to break it like it did right here, and then you just re-enter another sell. So you enter another sell, goes to the next zone right here, exit before it reaches the zone, and then you just wait for it to either reject off the zone or break below it. Right here, price rejected off it, but you wouldn't take this buy because it's already at the next zone right here. And the way that we trade is we pretty much trade from zone to zone because that's how price moves. Price goes from this zone to this zone, to this zone, to this zone, to this zone, to this zone. And it just pretty much bounces back and forth. And it makes things easier for, you know, all of us to enter and exit trades and understand how price is moving. But okay, let me go to US oil. So Andrew wants me to check out US oil. And I haven't checked out US oil since that huge drop a couple of months ago. All right. So let's see, we are at US oil. Yeah, I haven't looked at this in a while. So looking at oil right here, honestly, it looks like price is consolidating. It's just going sideways. But let me see where the zones are. So this is exactly why. So just looking at the zones, you can see that price is within a consolidation zone right now. So, and this is a big consolidation zone right here. And it's something that I definitely would not want to trade at the moment. I'll just draw these zones so that we know where to look. So yeah, just looking at this right here, you know, like I mentioned earlier, Andrew, you know, price, pretty much these zone areas are areas where you can identify rejections or breaks. So you can see price rejected off this zone, came down, broke it, came down, tested it again right here, and then it shot up. So price pretty much moves from zone to zone. Right here, you can see that price is within a zone right now. So you can see right here, price came down from here, rejected off this point, rejected off this point, rejected off this point. So it's stuck in consolidation right now. So you can see right here, prices, we have like a couple of green candles right here, like a green candle, this might close green too. Price might move from that point and just push up to the next, to the upper level right here. What I would wait for is if you want to enter oil, I'd wait for it to close above here so you can catch the move up here. So as it closes above this zone, you could enter a long position right here and then ride it to here. Like you can either ride it to there and move your stop loss and just secure your position in case it retraces back and then you look and guarantee pips, or you can just let it run to you know, a little higher. So I'd wait, personally, I'd wait for it to close above this zone, below this zone. Because either in either direction, you can take a buy and ride it that way up till the next zone. Or you can take a sell right here and do the same exact thing, right to the next zone. So you can either take a buy this direction or take a sell in this direction. But I would wait for price to break outside of this consolidation area, because the thing is you don't want to get caught in trade. So say if you enter a buy right here, you can see right here, this candle is probably turning green. So it's pretty much just rejecting off this point and then going up to this area. The last thing you want is to get into this trade and you get screwed because price goes up and then comes back down, and it pretty much just continues to consolidate until it breaks above or below. Because so if you wait for it to close above, you can probably catch it as it continues higher. Same situation if you wait for it to close below. If it closes below, you can catch it and ride it as it keeps going farther below. Because like I mentioned before, these zones here aren't guaranteed to, you know, for price to reject off them. They can always break below and then continue farther. But you just have to analyze it and, you know, both sides. And then pretty much just take the direction or price that you believe it'll move in. So once you have the direction, once you you know, determine which direction it's broken out from, you can use the pivots to identify the direction of price. Obviously, you can see here price is in an uptrend. So if price was to close above here, you can definitely see it shoot on upwards because the trend up is so strong. So if you zoom out right here, and then you can, I mean, there's a ton of confirmations that you can use. There's not just one confirmation to use, but so say if you map this right here, it's clearly in an uptrend, right? And if you map those together, these things line up perfectly, because you could literally ride this buy until the top of the trend line. But there's a ton of ways to apply. You know, there's not one way to trade. You know, I'm not saying that K2 is the best strategy available. It might be, but you know, there's a lot of different strategies that you can apply to confirm. Like right here, I don't use trend lines, but if you did add a trend line, you can see that it lines up perfectly with K2. You can see right there, that'd be a perfect buy. So, you know, that's one thing that we like to encourage here to, you know, if you're using K2, use it with your own strategy. You don't have to follow K2 exactly how we trade it, and you can if, you know, if you like it, but you can always incorporate it with other strategies. There's not just one way to trade. Like literally you can trade in either direction. Doesn't mean that you're always going to be right. Doesn't mean that you're always going to be wrong. It just really depends on how you like to trade and how you apply the strategies to your own liking. But yeah, for US oil, I would just wait for it to break outside of this zone. And then once it does, you can take either a buy or a sell. But I'm aiming towards a buy because of the uptrend. Okay, let's see. Next question is from anonymous attendees asking thoughts on Chf Jpy. Chf Jpy. So right here we had a buy entry right here, but I didn't call it. Reason for that was I just didn't feel comfortable with Chf Jpy because I saw this drop right here. See, the thing is, if price was, let me still delete this. So if price was above the pivots like it was right here, like clearly above it, then I would have taken this buy. The problem with this is that it rejected off this point, and then you can see that the pivots are kind of jumbled together right here. This is when I don't like trading it because there's no clear trend. If you have a clear trend like right here and you get a buy signal, then that's great because you can enter that buy and it'll probably right on upwards. The thing with price right here is we did get a buy signal and it was above the pivots, but the pivots weren't angling upwards and they also weren't spread out like how they are right here. So that's why I didn't enter this trade right here. But like I mentioned with oil earlier, it's kind of it's stuck within this consolidation zone right here. So what I would wait for is, I mean, I wouldn't even wait for this area to I wasn't curious what, I mean, so right here, I would probably wait for it to break below this zone because the thing is, if you wait for price to break below here, it's only 8 pips. It's not enough for you to make a profit before it may reject off it. You know, the spread is 2.7 pips. So you're gonna have to cover like 4 or 6 pips in order to cover the spread. And then you also have to, you know, make a little bit of profit off this move right here. And then similar to this situation right here, there's another zone right here, another 8 pips. So I'd wait for price to break below this area right here, and then I would take a sell if you're, you know, anticipating to take a sell, because this gives you enough cushion to enter a trade right here for about 60 pips, and then you can move your stop loss and profit. Once it reaches this area, you can like move your stop loss to like 50%, and then if price was to reject off this support, you get stopped out in profit. Or it might just push farther like it did right here and hit your full TP. But right now, this isn't something that I would like to trade. You know, main reason is because there's no trend that's been established. You know, us normally, we trade in the direction of trend and we trade in the direction of momentum. So if price is trending upwards and we get a buy signal, then we'll take a buy. If price is trending downwards and we get a sell signal, then we'll take a sell. So right now it's kind of in a sell bias. You can see right here that the pivots are angling down. And if price pushes farther down, so if price pushes down here, then for sure, this is probably going to spread out. It's probably going to switch into a downtrend like right here. Let me just delete this. So you can see right here, price swung below right here, and then the pivots were kind of jumbled up right here. But as soon as price was far enough below, like right here, you can see that the pivots were spread out and they were angling downwards, giving for a nice sell entry right there. Same situation with price currently. So price currently right here, you can see that price that the pivots are a little jumbled up, but once price gets a little farther down, like this area or this area, then it's going to be pretty spread out, and then it could confirm a strong trend downwards. So me personally, I would wait for CJ to push down a little further. The thing with this pair too is that it moves kind of weird. So, you know, you need some like extra confirmation before you enter it, because you can see right here, you can see that the pivots tried to reverse downwards, but it failed because it swung back up. Similar again right here, price came down and the pivots were about to spread out right here, but price was already retracing back in the opposite direction. So you'd have to wait for price to close below here and then spread out. Otherwise, price might shoot up this direction, upwards, and then maybe you can ride it going upward, you know, taking a buy position from right here. But this is just it's just a weird pair. Like it's going to be hard for you to determine the direction of price because these are both safe haven currencies. CHF, you know, the Swiss franc is a safe haven currency, and JPY is a safe haven currency. So the thing is, if the US dollar is weak, then you know both of these are strong because they're both safe haven currencies. So it's kind of hard for you to determine the direction of price unless there's something that indicates that one safe haven currency is stronger than the other. You know, if you match this with something like GJ is a little different because they're not a safe haven currency. You can see that the trends are a lot stronger and they push in that direction more fluidly. Like right here, price trended up. Right here, price trended down. Right here, price trended up. The thing with CHF Jpy is that price will trend up, but then it'll go sideways. Like instead of trending down, it'll go sideways. Again, right here, trended up. Instead of going down right here, it kind of went sideways. It went down, went up, went down, and then corrected back upwards. So this is a bit of a tricky pair to trade. This isn't a pair that I like to trade very often for that specific reason. So I'd be careful with this, but let me see if we have a momentum signal. So we do have the sell signal right here. If we do get a buy signal and it closes above here, then I would take a buy around this area. But until then, I would just wait because you don't want to get caught in something like right here, where right here it went below. And if you took a sell around this area, you would have gone screwed and then price rejected off this point and you would have gone stopped out. Same situation right here. If you get a sell here, and then it might reject off that point, or it might reject off this point here. So it just really depends on where price moves, you know, within the next 4 to 8 hours. All right, guys, I'll be right back. Give me 1 second. All right, guys, I'm back. Let's see. Delete this. All right, one question from Vanessa. Vanessa's asking, do you think GJ will go back up? Yeah, we're in a buy position, so you know I have a personal bias that I want it to go up. But you know, just looking at the chart, it looks like it is going up because you know, like I mentioned earlier, whenever price is above the pivots and the pivots are angling up and they're spread out like they are right here, you know, odds are price is going to continue upwards with the trend. Similar to right here, you know, price is currently above the pivots. Also, you can see right here, the pivots are angling up and they're spread out. So I'm anticipating this to shoot upwards. Right here, you can see a nice rejection off this support. And I'm anticipating it to continue back upwards. So if you're in GJ, then I think this is a great buy. Vanessa, I'm not sure if you're in the premium, but we did send the signal out. So we sent the signal out about, let's see, I sent the signal out about at 10 a.m. So that was about 8 hours ago. You can see right here from 8 hours, price hasn't really moved at all. I sent the signal right here. Price literally moved like 20, 30 pips. Not much at all. So, and we'll probably have to hang on tight because it's not going to move very much during Asia session. I'm sure you're aware, Asia session moves a little slow. So we probably won't see any movement until midnight, unless the Aussie news causes something to happen. So we do have news in about 15 minutes. So this might push price, but I'm not really sure. We'll just have to wait and see how the market reacts to that news. Let me see what's predicted. So they are, let's see, I don't even know what this is. CPI. Oh, consumer price accounts. Okay, cool. So they're anticipating it to, be lower. So they're anticipating the Australian dollar to be weak. Let me switch. Yeah, so we'll have to see how that affects the GJ, because it doesn't affect it directly, but it might affect it to some extent. So yeah, I do have a buy bias, so I do anticipate it to come on up, but we'd probably just have to wait for it to actually move. It's probably not going to move until London, because it just normally moves slow during Asia session. So let me keep going. Andrew said, I work in oil and gas, familiar with her movements, was curious with what you saw. Yeah, no, after that huge drop happened with oil, like not too long ago, a couple months ago, when the contracts expired, I haven't really looked at it at all. Let me see oil. Yeah, because the hype for oil kind of died down. See, like when this happened over here, everyone was trading oil. Like literally everyone was trading oil and making money just selling it until they got screwed right here, because it, obviously it recovered back up. But I think ever since then, I don't think anyone has been talking about oil. I haven't really seen anyone ask for oil analysis or even trade it in the chat. Normally there was a ton of people that were trading it. It seems like whoever was trading it before blew their accounts. So I don't think they're trading anymore. That's why I usually try to stay away from pairs like this, pairs that have a lot of manipulation like this, right? This is crazy. Like when this happened here, like this is insane. Like price dropped. I think it went to negative, right? It went to negative. Yeah, it went to zero, basically a negative dollar. Yeah, ever since then, not anyone's been really talking about it, and there hasn't really been very many signals here. You can see the momentum for oil kind of carries for a long time, and it lingers. But it looks like it'd be a good thing to scalp. Yeah, I don't see anything right now. I'd probably just wait for it. Me personally, I'd probably say a buy bias, but we probably have to wait for it. Yeah, I know, lack of demand also because of COVID. No planes, not many cars on the street. So, that's why a lot of people aren't trading it as well. There's just, the volatility is just so slow. Like you can see right here, let's see, in about 5 days, it's only moving like $2 per gallon. I wonder if UK oil is the same. Yeah, it looks about the same for the most part. It looks like UK oil is a little smoother. But yeah, pretty similar for the most part. Yeah, hopefully COVID ends soon so demand could go back up. I know before a lot of people were trading it, but I know now it's not so much since the demand's low. Volatility is kind of low too. Let's see what else we got here. Cool. Vanessa's asking EJ. So she's wondering if EJ is going to head back up. He said he blew his account. Yeah, I know that a lot of people blew their accounts trading oil before, bro. Like when this happened, when was that? That was in March, I think. Oh no, it's US 30. Yeah, when this happened, yeah, exactly. In April, like literally everyone was selling, and I don't know why people weren't getting rid of it. Like even when it got to zero, people were still holding on to it, and I was like, dude, like let go of the trade. And then as soon as it opened the next day, I know this happened like the day after. It opened at like oil closed for like a day because it was literally nonstop dropping. Or it looks like about 8 hours. So it closed for about 8 hours, and then people didn't get, or they couldn't get rid of the trade because nobody would buy back their positions, um, and they ended up getting burned. And this is why I don't trade stuff that's moving crazy like that. But yeah, let me go back to EJ real quick. So EJ right here, I have it marked up. Um, Personally, I think it's going to be a buy. So same analysis, Vanessa, with EJ as to what I was explaining with GJ. Like I mentioned earlier, price is trending upwards. So, looking at the pivots right here, you can see that price pulled back a little bit. But if we get a buy signal right here and it shoots up to this, above the pivots, then we can probably anticipate that it's going to continue up further, because the trend is still angling upwards. The thing is with EJ, it's not as clear as GJ because you can see here that price is kind of coming back down. And the pivots are, it looks like it might be attempting to, shoot in the opposite direction. But the thing with this right here, like I mentioned, if we get a buy signal, like, so you can see right here, price was coming down and the pivots were kind of angling down for a little bit. But once price broke above it and closed, you can see that it made a nice move upwards. Similar to right here, the pivots are angling down, but as soon as the candle pushes above it and closes above this area, the pivots are going to angle up again. And as they angle up and they're spread out like they are right here, we can anticipate a strong uptrend or a continuation of the uptrend. So you can see right here, price came down, retracement, rejected off it, pushed up. Right here, another retracement. If we did see a rejection right here. So if we do get a buy signal right here in this area, we can anticipate it to continue upwards. So if you're in a buy with EJ, I think you're good. The only problem is that it's kind of close to this resistance right here. So let's see how many pips. I mean, it's not too close. It's 55 pips. So if you were trading this and you wanted to scalp it or whatever, as price gets close to the zone right here, which is about, let's see, 123.85. Once price gets close to that area, I would just move your stop loss and profit. So say you're in this trade right now, right? I don't recommend entering it right now, but I'm saying if you're in this trade right now, once price reaches, this area, you can put you can even put your target right here to get out before it reaches the resistance. But once price gets around this area, I would just move your stop loss to like in profit somewhere around here. So in case price rejects off this resistance right here, you guarantee profits. You get stopped out in profit, which is fine. You don't have to hit the home run every single time. The main key about trading consistently and being consistently profitable is to minimize your risk. As long as you don't lose, it's impossible for you to blow your account. So as long as you keep moving your stop loss and profit and you keep stacking up those smaller profits, those small profits will add up over time. And that's just the main key, because the main reason why people blow their accounts is that they get greedy and they don't move their stop loss and profit. I've been a victim of that too a long time ago, but now I'm a lot smarter with my trades. So I always move my stop loss and profit whenever I can. Okay, let's see. We have one more question from VD. If you guys have any questions or any more questions, feel free to put them in the Q&A. This is our last question, so if I don't get any new questions, then I'm probably gonna get off a little early today. But if you guys want to reach out to me, if you guys have any, personal questions, anything specific, I'm always available on Telegram. So if I don't answer your question here, you guys can always ask me on Telegram, and then I can draw up a chart for you, if that's something that you guys want. Okay, let's see. So BD's asking NZD CHF bouncing off support on the 4 hour. So let's pull up NZD CHF. Oh man, I don't like this pair. So this pair right here, You can see that, and well, most of the NZD pairs, they're kind of choppy. Like look at this right here. Price kind of just switches in between it. It swings up, swings down, swings up, swings down. It's not really a strong trend. There's a strong trend right here, but this doesn't happen very often. So you can see this was a nice trend, but going to like comparing this to how price is over here, price is super choppy around this area. And then again right here, price trended up, came back down, choppy sideways for this whole period right here. So from the entire month of July, it was literally just choppy sideways, or from June actually. So from June until July, it was literally just moving sideways majority of the time. So VD's asking if it's bouncing off the 4-hour support, and it kind of is. The thing is, so I had this lined up here because this was a valid entry earlier, but I didn't call it because I had a feeling it wasn't going to go down. And that's exactly what happened here. So the thing is, it already broke this support, and then it retraced up again right here. So I think if it closes below a second time, so say if it breaks below this support and it closes below it, then I would anticipate this to come down and test the next zone, for like right here. So right here, if it tested this zone again, then that would be a triple bottom. So one touch right here, one touch right here, and then another touch right here. Let's see if there's anything else. Yeah, I think that's about it for NZD CHF, because right now it's stuck within this area right here. So I would wait for it to close below, because the problem is if you enter right here, price might reject off this zone and then swing back up. But you can see right here that there was a nice rejection. So it rejected off the K2 pivot right here, and then it's coming back down. So I think once price closed below the zone right here, that'd be a clear entry for a sell. Let's see how many pips is it. And it's for a decent amount, about 22 pips. The NZD pairs, NZD CHF pairs don't really move as much as, other pairs. So that's a pretty decent move right there for a pretty good amount of pips for this specific pair. Also, like I mentioned earlier, the K2 pivots are angling down and they're spread out. So this is a strong downtrend. So I personally would probably have a sell bias if you were thinking about entering this trade. But yeah, like you mentioned, it might bounce off the support. So you have to remember that it's still within this zone right here. So it might come down to this zone and then bounce off this right here. Or it might even come down this far, test this lower zone over here, or even this one down here, and then reject off there. But I would just wait for extra confirmation before even thinking about entering this trade, because I would hate to get into this trade and then you end up having to hold it for days, weeks, months. I remember the last time we held a trade for this, we held on to this trade for so long. And one of the issues with it as well is that the spread's 6 pips. That's a lot of pips. So the thing is, if you're entering this trade right here, you're going to enter at a 6 pip loss. So there's only 22 pips here to take. You're going to enter it way down here, and then you're only going to have about 10 pips to capture before it reaches the next support. And at that point, you're going to have to pay 6 pips spread again, and you're going to make like no money. So it's not really worth trading. That's why I stopped trading this pair as often until it breaks out and then it has a trending movement. But right now it looks like it's just going to go sideways again. I just see it going like breaking below and then pretty much going sideways for like the rest of the month. So I'd probably just stay away from this trade unless your spread's tighter. My spread's 6.3. That's super wide. I usually don't trade anything that has over 4 pip spread, because it's not profitable for me. It's not worth taking, because the risk involved versus the potential profit is just not really worth the risk. But yeah, guys, it looks like that's it for the questions. I'm not sure if anyone else here has any other questions. But yeah, if you guys are new here, just a reminder, we have this live trading room every Tuesday and Thursday from 5 to 7 p.m. So if you guys have any other questions, feel free to reach out on Telegram, or if you guys want me to, show you guys live like I did right here, I'll be up and live again next Thursday at 5 p.m. But yeah, guys, if you guys have any questions, I'll be on the Telegram, so feel free to reach out. Otherwise, I'll catch you guys on Thursday. All right, guys, see you guys later.